Thank you so much for joining me. It's 4:30. It's a little after 4:30, but this is your post-market show. We talk about the day's big events, the big economic, financial, and stock market news. We talk about personal finance, and we help you put things in perspective so that you can make the best possible financial decisions for your future and for your family's future. So, got a couple of things to talk about. Let's put the banner in, and we're going to talk about the markets. We gave a little bit back today after uh, a 4-day winning streak. I wouldn't call today a major disaster or like, oh, here we go again, testing the lows. Stocks are off a little bit today. It was not really a big deal. If anything, it was kind of a ho hum day. Why? Because people are waiting for the non farm payroll figures to be released on Friday. All right. I think they're, well, I think they're being released on Friday. Regardless, that's what people are waiting for. Actually, I think it might be April 8th, the following Friday, but that's besides the point. People are waiting for more information. And the week of April 11th is when earnings start to come out en masse. And some people are thinking this is going to be like the confessional period where CEOs and CFOs on their conference calls come out and say, things are really bad. We didn't want to tell you until now, but now that we've got visibility on things, we have to say that numbers are not going to make it for the rest of 2022 and stocks to go down. Could that happen? Yeah, it could happen. Do I expect that to happen? Well, I don't expect stocks to react particularly negative to it. I think investors have already figured this out. It's kind of like this. The stock market's a forecasting mechanism. If something's going to happen, it gets factored into the stock market, or if investors think something's going to happen. But then we think about the recovery after that. And then you realize, why did I bother selling in with all the indecision only to see everything recover? So the market's maybe factoring in the next recession, but then factoring in the next recovery and factoring in the next recession after that, and so on and so forth, and so on and so on and so on. So that's what's going on. Let's roll a quick intro, quick video intro. Let's get started by getting you in a good mood. Let's show you a picture of this very happy bunny. He's a cute little guy, isn't he? Eating his little carrot and his little mouth open. I happen to have a bunny. Did you know that I have a bunny? In my house, we have a rabbit who's the cutest little thing. We have a bearded dragon lizard, and we have a dog, a cavapoo. Here's Benji as just a puppy. We just taken him home. Look at that sweet little face. Uh, he looks pretty much still like that. He's just like tripled in size since we've gotten him. He's a lot bigger. Still not a big dog, but he's gone from maybe 6.5 pounds to just about 20 or 18 pounds, something like that. So let's roll the intro and get the party started. And here we go. All right, we're just getting started. So if you're joining me now, I'm Mitch Goldberg. You're watching my live stream called Be the Boss of Your Money. It's all about giving you the knowledge, the skills, and learning from either my past mistakes or investors' past mistakes. I've dealt with thousands of investors over the last 30 plus years in my career. And I know what people have done wrong. I know what people have done right. And I know what people have done wrong and corrected it. They've risen to the challenge and fixed they fixed the problem, the solution. And that's what I want to do here. I want to share with you these solutions. Today, we're talking about the stock market. If you have any questions regarding what we're talking about now or in personal finance in general, feel comfortable to hit me up in the comments. I'm broadcasting right now to YouTube, LinkedIn, Facebook, and Twitter. And, words of wisdom, words of encouragement, or just a hello are always appreciated. If you don't mind, give us a thumbs up, maybe a heart, or whatever reaction is available to you, depending on what social media platform you're watching from. And that would also help the show out and spread the good word about the fine work that we're doing here every day. So let's talk about the market. Okay. And by the way, here are the social media icons. If you want to follow me, go to any of these places. I see you out there. Melanie, thank you so much, Melanie. Melanie, I need your help because you talked to me about putting the show onto a podcast. Also, I'm sure I could figure it out, but I just need like an automated way to do all this stuff because I'm doing this, I'm doing that, and had some big life changes a little bit over a month ago, and I'm just starting to function, and I'm just starting to function and cope now. And while we're at the yes, Melanie says, heck yes, happy to help. But that's how you are, because you and I are friends on social media. And that's just cool. Like we became friends on social media. We haven't met in person, and you'll help me out. So I will reach out to you. Thank you so much. I saw that hugs. Thank you. I can use all the hugs that I can get. Really. Yeah, it's a lonely existence these days. Luckily, I guess in a way that I'm too busy to notice. Got teenage kids at home. Yeah, anyway, so let's talk about today's market action. So we have a down day, and people are making a big deal about, down. The market snapped a 4-day winning streak. And my answer is, who cares? So, the market was due for a little pullback. We've had a really strong correction. But did you know that right now, okay, I see Deborah Deborah, thank you so much for the heart. Thank you very much. You know, did you know that the S&P was off about 12% at its worst point, okay? 12% down. And now it's only down about 3% year to date. And being down 3% after the solid year in stocks we had last year, I don't think it's that big of a deal. It's just, if we skip that whole calamity that started late February and went through early March in the market, you really wouldn't even, uh, you'd be like, whatever, that's what happens to stocks. Now, the major averages are masking what uh, has happened to individual stocks that have just gotten absolutely crushed, and every day there's another stock that gets crushed. But I could go over so many, and it's not just the pandemic stocks like the Zooms or the Pelotons or the DoorDashers of the world. There are other companies like Biogen, and the names evade me for a second, but one of them is Biogen, Seattle Genetics. There are a lot of companies that have really just absolutely gotten mauled. Ford was $25, and now it's in the 17s. That's a big drop, guys. That's a pretty big drop. Now you could say that a lot of these stocks, it's not really a legitimate comparison to look at stocks at their all-time high, because you could say they never really should have been that high, but they did trade that high. Somebody had to have paid for the stock at that price in order for the stock to have traded that high, and probably a lot of people bought the stock underneath those prices. So anyway, the down market, a little bit, and if you are just an index investor, this hasn't really been too bad of a market. If you're in a growth mutual fund and just an investor who watches the show took the time to tell me about one of her main investments. She has this mutual fund. I forget who the provider is, but it's a mutual fund that is so similar to so many other funds. I call it a hot market fund. It was overloaded in technology, and people are like, oh, my fund is doing great. I'm doing fantastic. The only way you could have beaten the market in the last year and a half is if you overloaded yourself on Facebook, Amazon, Google, Tesla. All right. It's the only way. And maybe Nvidia and other stocks. But these stocks have all come down hard. So these funds are down a lot this year, way more than the major averages. So you really have to know what's in your fund. Don't just go by, oh, well, the fund is up more than its peers. Comparing a fund to its peers is kind of like comparing, a you know a professional football player to a regular guy like me. Yeah, we're peers. We're both adult males, but comparing one to the other is ridiculous. Okay, it's just I really hope this is making sense. Within a peer group, funds have a lot of leeway of what they could invest in. Some large cap growth funds could go very heavy into technology. Some could go very heavy into drug stocks, and there's really no way to know until you look under the hood to see what the top 10 holdings are of a particular fund. If you want to know how a fund is generating its outperformance or underperformance of the market at any time, just look at the top 10 holdings of the fund, because that's what will basically determine the performance of the fund. So if you see a fund is all teched out and you're like, wow, it's doing great when techs are hot, you've got, you're gonna love it, right? And when techs cool down, these funds cool down quickly also. And then you realize you gave back a year or two worth of gains. And now what do you do with the fund? So that's why we have to be careful out there. And Alex, hello to you, my friend. Hey, Alex, I appreciate you sending me that DM with your number. We should definitely catch up. I've just been overwhelmed a little, and just I feel like this week is like my first like normally functioning. I mean, I'm like this, but I'm functioning and I'm getting everything done. And a lot of the things I had to work on and that I had to get done, I got done this week and last week. So things are coming to fruition, and I could use a little bit of that. Okay, so enough of that. Let's take it to the tape. Okay, let's actually let me get rid of that. Um, there we go. All right. So the S&P 500, which is an index, by the way, you can't invest directly into an index, but you can invest in a security that tracks or mimics an index. Having said that, the S&P is off. Let me make this a little bit bigger because I know you're watching it on a smartphone and you want to make sure you can see this. Okay. The S&P 500 in the last year is up 16%, but year to date, it's down 3.44%. I mean, it's not the worst thing in the world. When it's down 12%, people are getting scared. This is why throughout the show, when the market was down, what I talked about is stay the course, make sure you have an investment plan, portfolio, whatever you want to say. Make sure that it is suitable for you, that you can stick with it through up markets and down markets. Generally speaking, markets recover and go on to make new highs. We could talk about war, horrendous geopolitics, but markets themselves, they do recover. I'm not trying to be I'm not trying to just hit you with cold hard facts and take the humanity out of this. I do believe there is a lot of humanity in finance, and I do believe very strongly that finance makes miracles. There are so many miraculous things that can be done through the financial markets, funding cures for diseases, therapeutics for diseases, uh, getting money to different parts of the world. There are so many amazing things that markets can do. And this is one of the reasons why I love the financial markets. When you see the financial markets fixing things in the world and helping people all over the world, it's really heartwarming. I wish I didn't have that screen up when I was talking about this important topic. Um, who's out there? Terry. Hey, Terry. Magra. Hey, Terry. Nice to see you. You're kind of like a new Facebook friend for me, too. Even though, like, I've heard your name like a gazillion times over the years, we're finally connected. There are a lot of you who I really want to meet in person. Melanie and Terry, chief amongst you. Okay, so I'm glad you're here, Terry. Thank you very much for stopping by. Hmm. Just a quick question for you. Would it be wrong for me to do a show about grief? Let me know in the comments. It's a weird thing. It's like the same for everyone, and yet it's different for everyone. Um, I don't know. Just thinking outside the box. But I do love markets, and I love markets, financial markets, because they do so much good for the world. So we could get into the cold hard facts that markets could be unaffected by wars and destruction and all the horrible things that are associated with war, such as loss of life, chief amongst them. But markets also do great things. They equalize and neutralize battles. Markets get money to where the money needs to go. Financial markets can get money to those who need it. When you buy a municipal bond, for example, you're funding quite often a much needed hospital, for example, where you're funding something that improves the community in which you live for everybody. When a company goes public, such as a healthcare company, even a tech stock, you look at what these companies do for the world in terms of cloud computing, networked accounts, networked everything. It really is remarkable. And then you look at the charitable component of what companies do, and you really have a an amazing thing that financial markets could do. That's one of the reasons why I love my career so much. All right, so anyway, the S&P was off a little bit, about 3.5% this year. Okay, let's take a look at this. All right, let's make this a little bit bigger. All right, the Dow off 65 points. It's not really what I wanted to do. The Dow up 65 points. Oh, I messed up the thing. All right. So the Dow up 65, NASDAQ off a little bit over 1%, the S&P off 0.6, not a big deal. The 10-year yield was 3.4, now it's 3.34%, so coming down. There's a little bit more calmness. The VIX over here at 19.33, still under 20, so I'm still thinking I need to be personally more bullish than bearish when the VIX is under 20. Oil gained a little bit, but you could see it's finding its footing somewhere between, let's say, 104 and 110 for the price of oil. It seems to be, the range that oil trades in is starting to narrow. Gold up 20, but still under 2,000, and the Russell 2000 down 2%. That's a nice size hit for any index. The Russell 2000 is a small cap index. I call it the index, the biggest index that you're not following, but you should. It's small cap stocks. And let's take a look at some yield curve analysis. The 2-year is at 2.30%. That's this one. While the 10-year, see where the cursor is 2.345. So we're not at an inverted yield curve just yet. And it's the difference between the 2s and the 3s. If the 2 goes higher than where the 10 is, like right now, the 10-year yield is 2.345. So if the 2 goes to 2.346, that would mean it inverted. I would pay attention to it. A lot of people don't think the inverted yield curve means a lot because of Fed stimulus, Fed bond buying, and all the money that's been pumped into the economy. But I do believe the yield curve as a predictor of upcoming inflations is valid, and it usually works almost every time. And I think it gave like a false positive once, maybe like late 80s. I don't know. It gave one time, but generally speaking, it's an excellent predictor of recession 6 months to 18 months out. And until it's proven otherwise, I'm sticking with the yield curve analysis. Okay. But the 10-year yield is at 2.349, and it's starting to come down a little bit. Let's take a look at crypto. How do we do in crypto? Are you guys still interested in crypto? I feel like even though crypto is recovered and so much of its recent losses, nobody's really asking me about crypto in the comments. But there was a time when like every comment coming into the show was about crypto. What about crypto? What about this crypto? What about that crypto? And I don't know. It seems like we talk about it more, but I feel like the interest is, let's put it this way. The interest is still there, but I feel like the this incredible deep fascination with it is not quite there anymore. I feel like people are getting used to hearing about Bitcoin and Litecoin and Ethereum and other cryptos. So maybe it's just that the fascination is gone down a little bit. So crypto, the main one, Bitcoin, was off a little bit. No big deal. Not, everything I feel like was off a little bit today. Let's take a look at the watch list. Some industrials were up pretty good. Lockheed Martin, Northrop Grumman, these stocks took hits recently. Caterpillar Deere took a hit recently. So the stocks were down recently or up, traded up. Southwest Airlines finally starting to take off with the price of the stock. Pun intended. You get it? Take off. I think didn't realize I was doing that. And but let's take a look at the stocks that drive the market, and that's the FANG M stocks. So if Apple is down, Amazon, Facebook, Alphabet, Microsoft, and Nvidia, if these stocks are down at the same time on the same day, generally speaking, you're having a down day in the market because these companies are so big that while any one of them might not dominate the market, you put them together and they really do move the market around. They push the market up and down. And they've recovered recently from their lows. So you've seen the market recover. The S&P is up like 11% in the last maybe 3 weeks, which is a really big move. And, if you got out of the market, you missed it. And now you have to hope the market goes down again so you could buy everything that you wanted to buy. But if it does go down, you're not going to buy everything that you wanted to buy because you're going to think the market's going lower. And if you think the market's going to go lower, then you're just going to wait again. And what happens is endless procrastination and you never pull the trigger. And that's why I don't like these all or none investing decisions. All right. I think those are the big topics of the day, really. It's just, we talked about globalization. We're covering a lot of big topics here, and I feel like we're kind of going through the show pretty quickly. But I've got a couple of ideas to bring to you, and that's about it. I just wanted to talk to you about this, give you a quick update. If you think of anything that you wanted to ask me, hit me up in the comments, even after the live stream, or if you're or if you're watching in replay. I will definitely see the comments, and I would be delighted to answer your questions. All right. Have a great day, and I'll see you tomorrow. Bye.